Hello again, and we'll meet again for the second presentation about the investment strategy. I will remind you about myself. My name is Ibrahim Abdelhadi. I will be going through that presentations to introduce you and to give you that knowledge about what's happening and how to investment and to do your investment in real estate in a proper way. So, to talk about the second round of unlocking opportunities is the session 2 investment strategy. And when we talk about investment strategy, we need to talk about the diversification in this investment and rental income or capital appreciation, the risk assignment, the ROI calculation, and the exit strategy. Give you a brief about who I am. I lived and I work in UAE for the most 10 years. I was working in different in family business, managing sales, and I had this, and my background is in finance, talking about investment in real estate and managing portfolios. To talk about and more to go move ahead with diversification, we need to know what's mean diversification and how it's important and necessity to do that kind of work. Diversification is empower investors to weather market fluctuation and unlock investment fully potential. Second, importance, which is that will give you a shield against the risk and maximize return by spreading investment in different type of property. And how the dynamic is UAE real estate market diversification is ensuring your reliance and growth. To talk more about it, we need to talk about diversification across the types of property and as well across the region. To talk about types, we have, as we mentioned earlier in the previous session, we have residential, we have commercial, we have industrial, and that will go more in deep. Residential, we are talking about any type of residential, either apartments or villas, townhouses. And this will give you stability and steady rental income. We have commercial, either offices, retail places, and this will give you high return of income, especially in the prime location. As well, industrial, we are talking about warehouses and manufacturing facilities. They will give you longer return and more stability and lower vacancies rate to have. To talk more about the cross region, we already mentioned about the types. This is different types. When we talk about the region, we are making different types, different points that we need to highlight. First, the market exposure, the risk, duration, and stability when you have through regions. Market exposure, that you expose different emirates and you have portfolio in multiple market. So that how it give you exposure and give you stability. If any area will go slow down, the other area will be much more performance. Risk duration, that you are reducing your risk when you invest in different area. And stability can give you stability in your portfolio while offering high return in emerging areas. To talk about it, like across cities and areas, Emirates, you have consists diverse of emirates. Each will have unique category that will allow you, and has category, it has selling point, capitalize in specific cities, like in Dubai, Abu Dhabi, Ras Al Khaimah, Sharjah, Ajman. Each emirate has their own investment specification. Areas within the Emirates. For example, when you invest in Dubai, you have different areas that we need to highlight and give you more growth and returns. Like downtown, it gives you solid because it's the most demanding area because it's close to Dubai Mall, the biggest mall in the world, and Burj Khalifa. You have sea sea view areas like JPR, Marina, Palm Jumeirah, and other, or you have the solid one where you have in the middle of the city, on the side of the city where you have more families that they are looking to have their own townhouse. The advantage of diversification property type. You have risk, diversity in the risk, spread the risk, and not on one sector as well. We are talking about types and we are talking about the region. Income streams that give you residential, as we mentioned earlier, between the residential and we are talking about the commercial. Adaptability and risk market cycles. So you are, so in if the residential will go lower, you have said the commercial is running good. If it's other way around as well, it become as type of market trend. So in terms of areas, so some areas will have more demanding, so areas will be less demanding. So as well, this it will change the cycle on the market and the demand, and that will be affecting for you. To talk more about it, the example, world-class case study. So between first example, residential and commercial, okay? So how significant demand for commercial offices. However, during the COVID, swept across world, so it was the demand for residential, for biggest residential communities, size apartments and villas, and less on the commercial. However, in location, okay, compared to real landscape in Dubai, so specific that has been outstanding 20% demand in both property and value, large in Fahada, for investor. So people they start looking for different emirates to play pivot role on certain emirates. So it has different significant demand in the other areas in terms of location. Now we'll move ahead from the diversification between the type of property and location to income and capital appreciation. Rental income, which is it gives you study of income providing financial stability as other source of income. However, capital appreciation that give you long-term capital growth, and this will give the benefits to the owner to make more money when the value increase the value of that property over time. Rental income and capital appreciation. Rental income that managing tenants dealing with vacancies and potential for rent fluctuation. Capital appreciation that more give you relying on the market appreciation and might not provide income. However, it gives you upfront cost and potential market risk. The risk assignment. The risk assignment is to understand different categories. First of all, the market volatility, the legalization change, and the income fluctuation. So when we talk about the market volatility, So we are talking about fluctuation driven by different factors in terms of demand, supply, economic conditions, about the legal stuff. So that based on the government policies and regulation that impact the ownership, taxation, and key aspects. And this is how we saw the government policy and regulation improve the market in terms of to push the market of to over the price of the market to aim for golden visa. Fluctuation in the economy that influence property value in terms of rental income, in terms of demand in different property types. So affect the risk assignment strategy, and we plan always when we invest in property, we aim for profit. So we need to do our due intelligence, we need to do our market research and partnership structure. To talk about due intelligence. So here through the research, inspect property considering their condition, location, and market trend. So we need to understand about these three aspects: condition of the property, where is it located, and what's the market trend for that specific area. As well, when we move ahead to market research, we check about condition, location, market trend. We need to do about the market research. We need to know about the condition as well, what we mentioned, what's the trend, and what's the future development it will be surrounded by this area. You might purchase a property and the view it's empty, but you have plot in front of you. So that might in the future will come as a construction site and build a property, a building that will close your view. So you need to know as well, and you need to do your due intelligence to be aware about what's happening surrounded you. And partner structure, which is you need to collaborate with the expertise consultant agencies to advise you and share the risk and their experience in the market and advise you in much better way. When we talk about these three aspects, due diligence, the partnership, and the market research, we need to know about the challenges that we for both parties. First of all, impact of changing legalization that, as I mentioned earlier, they introduce the 5 and 10 years visa, golden visa, if the unit over 2 million, if you paid cash for the value of that property. As well, strategic partnership, when we are, and this, what's happening, and this will give a solid to UAE market and improve UAE market for much way and higher value and get trust by everyone. By what? By collaboration with well-known brands and this will give you search on demand where you collaborate with multiple brands in international brand. When you talk about return of investment, we need to move ahead and to understand how we do the return of investment, where we are doing calculate the expenses, income minus the expenses over the value of the property, or what the cost of investment, and how this is how we can get the ROI. For example, when we're talking about ROI, we purchase property of 1.5 million. Okay, your annual rental income is 120,000, and your expenses is 25 for maintenance and total expenses. What's your ROI? So we'll do it 120,000 minus 25 over 1,500,000. So by this way, we can get the calculation of, we'll do it, okay, divided by 1,500,000 minus 25 divided by 1,000,000 is 6%. And if we are talking about in commercial property, you invest 3 million and your expenses are after 5 years. What's your ROI? So is the same. %12. And when talk about the ROI is positive, when if you have a positive ROI, that means you're in the right side. If you are negative, there's something wrong. And this will give you a holding market informed decision and compared to different investment opportunity. To talk about more and to keep more, we invest, we diversify your property portfolio between residential, commercial, offices. We put it for rent. We get our ROI 6% for commercial. It reached to maximum 8% for long term. However, for short term period, it can be reached to 12%. And now we get our ROI. Now we need to exit. How we need to exit? Exit strategy is a journey from the way you invest. You initiate your idea to invest. You fund, you purchase, you put for rent if you want to put for rent. It make you a return of investment for a certain period. Now it's time for you to exit. How we need to exit and achieve our object of exiting after either the value it make me profit and it get appreciated for a certain period, or I give it for rent, I get what I want, I'm exiting. So it's principle for investment journey reflecting the achievement of your object, whether it's short term, long term, okay? Crafted exit strategy. Guaranteed that your investment are in harmony with your goal. Exploring exit option. Investors have several exit options as we know. And this is how I work with my investor. Either by selling or holding or refinancing these options. By selling is we obtain to sell that property on result to profit and liquidity, okay? And we reinvest to use the proceed as desired. Holding, we hold that property for long term or short term to give me a wealth accumulation, potential wealth accumulation of, I'm aiming for a return of 8% yearly. And the third option is through refinancing, where we unlock the equity to refinance this property value without selling it. So I hold this property, I cover it, I refinance that property, I cash it, and I will move ahead with another investment options. So we either we hold, we sell, or we refinance. And we will go through the example of exit strategy. So we bought this off-plan residential property for 1.5 million. Initially, we paid this property of 40% of value through the payment plan, and we are planning to resell that property with a 20 to 30% profit. So we are making profit. So if we invest 40%, and we are going now to what? To resell it with 70% of the value. So this is how we are making our exit. So I'm flipping the property while it's what? Off plan. Example 2, we purchase a unit of 2.5 and we bought for long-term rent for 150. After 6 months, the value of that property increased to 3 million. So I already aim. We bought for rent for 6 months, for 1 year. So I took 6 months of this period of 150, which is 75. And the value became now 3 million. So I already made 575,000 of that value. So it's seizing opportunity, and I decide to sell it. So this is how we are exiting the market. So I'm selling it. I put for rent because this was the aim, but the value did get increased. So I sell it. So I'm not hold. I hold it. I resell it again. So I do 2 options. So the exit strategy is risk tolerance, and it based on the market condition, as well as to ensure that you make informed decision, maximize your return, and preserve the value of your real estate investment. So by this presentation, we talk about diversification of your property. We talk about the return of investment and how you do your due intelligence when you choose your property. Location, condition, and the market conditions, as well how to exit, either by selling it, refinancing, and by holding. And with Dubai UAE real estate market, it's performing very good, and the pricing and market condition is really well performed. So if you have any question, please reach me in my social media, my email, my contact details here, and let's start your journey investment today. Thank you so much.